Hey Investy Besties, welcome back to the channel. If you're new, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate all of you guys being here. If you're new, welcome. I am a 39-year-old mama and wife and worker bee. We are trying to, when I say we, my family of 5 is trying to get to financial freedom, financial independence. We're trying to retire early, relax early, do all the good things, right? We're supposed to do with our finances. If you want some encouragement, some motivation, some inspiration, make sure you subscribe, like, and share. I am not a financial advisor. I am not a fiduciary, but I do show real numbers. I am an investor just like you. I'm in the trenches during the good, the bad, and the ugly. And I make these videos as a video diary for my husband and myself. And also, please beware of scammers, fake pages, WhatsApp, suspicious DMs. If it sounds too good to be true, always confirm via my email, mommytradertube@gmail.com. So today we're going to be talking about 5 cons to dividend investing, right? I think it's important when you are embarking on any type of financial journey to analyze both the pros and the cons to anything. You want to understand risk associated with real estate, with the stock market, with crypto, with gold and silver metals. If you want to start a business, you want to stop and consider both the pros and the cons to everything that you are doing. Okay, so today we're going to be talking about 5 cons, in my opinion, to dividend investing. Now, this is me. This is your investy bestie, someone who is passionate about investing, especially in dividends like you are, or many of you are. But I also understand that I need to know the risk or cons to it. So that is what we're going to be talking about today. Okay, so in my opinion, this is mine. Okay, so let me know down below, in your opinion, a con to dividend investing, or if you agree with one of these, like you really agree with one of these, let me know down below. I'm always open for dialogue and chat. Again, always be respectful. You guys know I don't do judgmental or hate or anything. I will bless and block, because I don't do negativity here on my channel or in my life. I'm too old for it, and it's already enough of that in the world. So I want a safe space where we can talk and have discussions, because I love to chit chat. Okay, so let's get to this. So let's talk about the first con, and that is chasing yields, because this can really backfire. I remember when we bought TSLY last year, and I had found out about it. I did some research, but I was really just Google-eyed over the high yielding monthly dividend, right? But what I didn't realize was that the stock was terrible, right? And this is why I'm always talking about believing in what you are investing in. If you don't understand how the underlying stock or ETF is operating, then you could be setting yourself up for failure like I did. I made a couple of videos talking about why TSLY didn't work, why we won't be investing in those type of yield max. Now, if that's something that you like, that's perfectly fine, because it's your portfolio, it's your money. But the type of investor I am, I'm just not for that. And I realized too, over the past few years, was that I don't have to be an investor according to someone else's standards, right? Because your girl over here, I'm an emotional person, right? And I like to invest in a way that makes me feel comfortable. Like if I'm not attached to the phone, if I'm out with my husband or hanging out with my kids, I don't have to worry about what a stock or a fund is doing. That's why I don't do options or anything, because I'm just not built for it. And I realize that's okay, because we still have $1 million investment portfolio with real estate, stocks, and funds and ETFs and all of that good stuff. So I can still get to financial freedom, not doing all of that, including chasing yields. And fun fact, Warren Buffett does not like high yielding dividend stocks, and he is a very conservative investor, probably the greatest investor of all time. So it lets me know that I'm in good company, because if the GOAT is doing it and he has documented results, then I'm okay too. So chasing yield is a big con, because you'll see that high dividend and you're like, ooh, this is good, and you don't realize that the underlying security is performing really, 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 really bad. Okay, guys? And remember, if you're getting high yields, that means that that company is not investing back into itself. is paying you out a lot of its profits. So, innovation is good. Creating more products and services is a good thing. You want the company to grow. And so, again, just me personally, that's a con, is that, you can chase these high yields. Okay. And this goes right into the second point that I wanted to make, and that's lack of growth. So when you hear me talk about our portfolios and you hear me talk about this portfolio is for income, this portfolio is for growth, I'm really strategic on purpose, because a con to dividend investing is that you won't get a lot of growth, right? Great. Give you a great example. QYLD. I love it. I talk about it often. It is made for income. JEPI is made for income. JEPQ is income. There's not a lot of growth in those particular dividend stocks or ETFs. However, NVIDIA, right? Believe it or not, NVIDIA pays a dividend, but it is heavy in growth. So it does not pay a lot of its profit out in the form of dividend, because it's constantly reinvesting back into itself, so that it can continue to grow. I mean, NVIDIA has been all the hype and all the rage these days, and rightfully so. I mean, AI is the future, and a lot of people want to kind of get on the train early, right? And so, again, the downside to dividend investing is that you don't get a whole lot of growth. So one of the things my husband and I do, and again, not financial advice, but we streamline our portfolios for specific purposes. So our taxable accounts are for early retirement. I'm 39. So our taxable accounts is money we want to live on without having to worry about penalties from the IRS. So that's what our bridge accounts are for, right? That is for income. But our 401ks, the Roths, HSAs, etc., is growth. And a lot of our kids' money, like our kids have investment accounts, their money is in growth as well. Okay, so I just wanted to point that out, that's a con to me of dividend investing. So if you are into dividend investing, make sure that you have your portfolios built specifically for that. So one thing I always suggest, not financial advice, I have to say that, is have more than one portfolio or more than one account at a broker. So this particular portfolio is for this. This portfolio is for this. So you have to have some type of strategy, okay? Another thing is that your dividends can actually be cut or paused. I actually have a website that I want to share with you guys. Let me pull it up, because I want to talk to you about how to find dividends that are going to be cut, okay? So this website is marketbeat.com. This is free to research. They do have a free trial or a paid version, but I use the free version, and that just works for me. But one of the things that I love about this website, again, you need to research, and I'm trying to share with you guys some of the places that I use to research and stay on top of things. But to see recent dividend cuts, this website does a great job with it. So this will show you, for example, Sabine Royalty Trust. They just did a decrease in their dividend of 10.03%. So this will tell you, so you don't have to figure it out. You don't have to wonder. Again, it will require some effort on your part, but this website is great to see, okay, if I am dividend investing, I need to understand that dividends can be cut. They can also be paused. So Disney paused their dividend during the 2020, 2021, 2022 pandemic, because they wanted to preserve capital. Remember, when you're getting a dividend, the company is paying you out a piece of their profit. So because they wanted to conserve money, they paused their dividends. So dividends can be cut. They also can be paused as well. So again, I will link this website down below so that you can come and check it out at your leisure. Okay, so the next con to me of dividend investing is if you have no purpose, if you don't know why you're doing it, what's the end game with investing, period. But you have to be a little bit more strategic with dividend investing, because you need to understand why you are doing it, right? If you don't have any plans of retiring in the next 3 to 5 years, growth really is where you should be at. But because my husband and I plan on retiring, in that timeline, we want to build up our dividend income account so that we can live on that money while simultaneously putting money in the long-term retirement accounts like the 401k, HSA, Roths in growth. But that's growth there. But in our, the short-term bridge accounts, taxable accounts, that's where the dividend income is. But see, there's a purpose, there's a strategy, there's a plan that we have. So what is your purpose for investing in dividend stocks? If I ask you that, but if But a con to dividend investing is if you have no purpose, right? If you don't understand why you are doing it, if you don't understand what dividend investing is, it can really backfire. So again, it's important to understand why you are, doing things. And then at the bottom here, delete that, is taxes, right? This is a con to dividend investing. And I actually have an article from NerdWallet that I wanted to share with you guys. Now, NerdWallet, I've talked about NerdWallet before. I'm not sponsored by them, but NerdWallet to me is one of the greatest, I think, just overall financial resources available to retail investors. Those are investors like you and I. We are DIY, doing it ourselves type of investors. I think NerdWallet is a really, really great website. They do have a paid version, but again, the free versions on a lot of these websites are sufficient, at least in my opinion. But a lot of times we don't understand the tax implications for dividend investing. And this is a great article that does a great job with, helping you to understand. Oh, let me X this out. Helping you to understand tax implications on dividends. So whether you get your dividends reinvested, whether you take the money and run, you will still have to pay taxes. Remember, these investment brokers are documenting all of your transactions, whether you buy stocks, whether you sell stocks, whether you get dividends reinvested, whatever you are doing at Fidelity, Vanguard, Cash App, Robinhood, etc. They are keeping a track record of it. So they will report it to the IRS. So it's also, excuse me guys, allergies. It's just the post-nasal drip is kicking my butt. But it's important to understand when you are dividend investing that if you don't understand how taxes will be affected, will affect you, it can be a huge con. Okay, so this article does a great job with helping you to understand taxes. Qualified dividends are taxed at 0, 15, or 20%. But again, that depends on your taxable income. So if you file your taxes, you should know what your tax rate is. Like, you should know where you fall in at. Also, if you're married filing jointly, are you head of household? Are you single? That also plays a part as well. If you get non-qualified dividends, those are taxed higher. So you need to go, one of my favorite websites is Stock Analysis. So you can go ahead and type in your specific security or ETF, or just go to Google and you can say, is SCHD a non-qualified dividend payer? You can type it in and it'll give you the answer so that you can see, how often are your dividends taxed. Another thing, and again, I'm not a tax person, but I'm just trying to give you some insight into what my husband and I do. But if you have other assets that can help offset your tax bill, essentially, like real estate. Real estate is one of the greatest, I think, tax havens for people, right? For homeowners, if you have rental properties like us, there's a lot of write-offs and credits and deductions that are associated with real estate, or even like a side business. I run MT, right? Mommy Trader. This is a business for me. There's a lot that's accessible to business owners so that it can help offset what you may pay. So when you put all of that in the same pot, you may end up owing little or nothing. But this is why it's important to have a good tax person. That's key. A good CPA, because they can actually, a CPA, a tax accountant, whoever, to help guide you, to help you to streamline, your investments, and particularly your dividends. So with us and our tax person, there's no issues for us because we have a lot of real estate. I have my business. My husband has his side hustle. We have 3 kids. Having kids help with your taxes. That's just the truth. It helps. We have 3. And it really does, understanding your entire tax makeup, not just with dividends, but just your entirety, your tax makeup will help you to determine, whether dividend investing is for you. And if it is, how much you will be responsible for when it comes to paying it out. So again, guys, I hope that you enjoyed the video. I will leave this article, both articles that I talked about today, down below in the description box. Again, if you enjoyed this video, please make sure you like, share, and subscribe. Smash notification bell so that you don't miss an upload every single time I post a video. And until next time, you already know, I'll see you in the next one. Bye-bye for now.